Interest rates, inflation, and what does that mean for commercial real estate investments? Interest rates have been at historically low levels, but we're definitely expecting those to be on the rise now. And the question that I was asked was, how sensitive is the commercial side of real estate to interest rates? And the answer is, it's very sensitive. The cost of debt plays a substantial role in the way that you value commercial real estate, and most commercial real estate transactions definitely rely on financing. So interest rates play a big role there. It's been said, where interest rates go, valuations follow. But even though we're expecting interest rates to rise, the beauty of commercial real estate lies in the balancing act of the commercial real estate market. If interest rates are rising and if inflation is coming back and those are bringing good things like job growth and new occupancies, then rents will be going up as well. That means the income of the property should be going up, and in turn, the value of the property increases as well. And that's why commercial real estate is viewed as such a great hedge against inflation. We don't get too concerned about interest rates rising as long as they're rising for the right reasons. Reasons like economic growth and new demand being created. In a later post, I can explain how we've actually adjusted our business plans and how we've structured our debt instruments to capitalize on situations like this even further. But for right now, I hope that helps. Aloha.